If you're just starting your investing journey, you've probably come across these two ETFs, IWDA and SPYL. Both are very popular, both are very low cost. But which one is actually better for you as a European investor? In this video, I'll break them down in simple terms, show you how they compare, and reveal which one I personally choose and why. Let's dive in. First, let's define the two of them. IWDA stands for iShares MSCI World ETF. It invests in over 1,500 companies from developed countries like the US, Europe, Japan, and more. SPYL stands for SPDR S&P 500 ETF. It invests only in the top 500 US companies like Apple, Microsoft, Google, and so on. In short, IWDA, Global Developed World. SPYL, US only, both are accumulating ETFs, which means they reinvest dividends automatically. Perfect for long-term compounding. It doesn't require you to do anything with taxes up till the point you actually sell them. Now let's talk performance. Historically, S&P 500 or SPYL has outperformed IWDA over the past 10-15 years. Why? Because US market has been extremely strong, especially the tech sector. But that also means you're more exposed to one country. If something big hits the US economy, your entire portfolio feels it. On the other hand, IWDA is more diversified across regions, which can reduce risk but might also lower returns slightly if America remains number one in the world. It's a classic trade-off. On one hand, you have higher potential growth, on the other one, more balanced exposure. Now, let's visualize this with a simple example. Imagine you invest 1,000 euros today in each ETF. Now, if the US keeps dominating, SPYL likely grows faster. If Europe or Japan rebounds, IWDA might catch up or even outperform the same S&P 500. Here's the key. Both are great choices. What matters most is consistency, not trying to time which ETF will win which year. Personally, I use both, but in different ways. SPYL is part of my portfolio. I believe in the long-term US growth, but I also like having IWDA as a beginner-friendly option for those who like completely passive strategies, and also for some of my business accounts. If I had to pick just one as a beginner starting from complete zero, I start with IWDA. It's broader, simpler, and safer if you're nervous about putting all your eggs in one basket. And remember, you can always adjust later if needed. Once you decide, the next steps is actually buying the ETF. Now, if you do want to research a little bit more, jump into this website of justetf.com, either type SPYL, enter, you can see the ETF, or IWDA. In this instance, enter, you see the one choice. Now, what will this give you? It will give you all the fact sheets, kits, and a lot of different information. Let's open a fact sheet just to see a bit more information. We see the expense ratio, we see how much money is actually managed under this fund. 23 developed countries, 85% of the listed equities in each country. That means you're literally investing in each other country most of the time. The returns, quite nice altogether. If I invested 10,000 in 2009, I would currently have somewhere around 45,000. Since inception, around 10% return. Now, I still remain quite heavily invested in United States because it's just massive, and I can see the companies I'm investing in. But I do have quite a few other countries too, so it gives me that diversification. Now, this information is accessible regardless which ETF you pick. This website can give you the analysis tool, but then you have to jump into actual analysis of where you're investing, but then you have to jump into somewhere where you can actually invest in them. This website doesn't allow you to do that. Now, if I open S&P 500, for example, and I open the fact sheets, it's slightly different because it's different company, so the tables are slightly different, but it gives me exactly the same information. So top 10 holdings, sectors, I obviously invest only in United States. But if I would like to actually find it, I literally go on the platform I want to use. I'm using Freedom24. If you decide to try it, the link is in the description. By entering SPYL, I can find one, and IWDA, I can find another one. Now, one of them costs 90 euros, another one around 11 euros. Doesn't make a difference, it's just two different strategies. So if I would like to invest, for example, 1,000 euros, so let's say I would pick 50 units. 585 euros, a total order. Okay, maybe I want to invest a little bit more, 80. Let's make it a nice 1,000 euros and 90 units. Let's make it a nice 100 units and invest 1,100 euros in S&P 500. Place buy order, confirm purchase. Confirm, and it's active. Now, it should go through quite quickly, especially if the market is open. So for me, I can see next to orders if it goes through and if it jumps straight into my account. Don't forget that you have to top up your account, so you actually have to have enough money to be able to buy it. But overall, this portfolio is accessible. You can actually find the portfolio itself through the links. I'm sharing my choices completely for free. And currently, this portfolio earned me about 20,000. So maybe that's something you want to have a look at. Like, whichever choice you pick, you still want to use a platform which is beginner friendly, transparent, and built for you investors. And the main thing which I would like to leave you with is start now. Even with a 50 euros, 100 euros a month, it can turn into a quite big thing over time. Like this video, drop like and subscribe, and let me know which ETF you picked in the comments. Thanks for watching, and I'll see you in the next one.